Good morning, everybody, and welcome to today's episode of Market Check, brought to you by BB. There is no second best daily YouTube live stream to talk about markets. And what a week to talk about markets. What a month to talk about markets. What a time to not just be talking about markets, but also just kind of be present, participating. So many opportunities, so much volatility. Rest assured, though, guys, we're going to do our best to cover everything that's going on, because as I'm sure you're all already aware, things are moving very quickly all the time. Things are changing very suddenly all the time. It can make for a fun, but also at times a treacherous environment to trade and participate in. But yeah, like I said, we're going to do our best to cover what's going on today. And things we say today might age out completely tomorrow. And, same could be true tomorrow into Friday, but who knows? I'm Tommy. You guys also know me as Snorlax. I'm joined by Max and Tucker. Welcome, guys. Hope the audience is all having a great Wednesday. Hope everybody is staying safe, right? Because it's like I said, man, this volatility in markets is something else. We're seeing some green to start the day. VIX, they're trying to get the VIX back below 50. They're trying to hold Bitcoin above 75K. They're trying to hold things like QQQ above 400. We can go deeper into levels, though, here in a second on the show. Like I said, we're going to do our best to cover all this volatility for you guys, and we show up every single day. It would mean the world to us if you could hit the like button for us. Help us continue to grow our channel. Because after all, man, these are crazy times. So I won't bug you guys too much about the like button today, but we are always very appreciative when you do that. Let's get into the market, though, on a deeper level, because I can only say so many times how volatile and how crazy the market is trading. We're currently green on the day. Is this a case of bad news finally not resulting in lower prices, price depreciation, or is this going to turn out like it did yesterday, where we opened green by a few percent? I think the Qs were even green by about 4 or 5%, and then they ended up closing multiple percentage points red. So what sort of environment are we in? Are we still in the environment that we've kind of been in over the last few weeks, or are we beginning to see maybe the beginnings of a regime change now that, today is April 9th. So effectively the tariffs went live tonight. We've got a pretty massive trade war with China that, whenever you think that it's beginning to maybe hit a peak, they find a new way to escalate things. So that seems to be really what is concerning markets at the moment. And as that volatility, as that uncertainty continues to heighten, obviously you have stress occurring in the bond market, in basis trades. Treasuries are a huge topic of discussion right now across all markets. Yields are a huge topic. I think there's just so much going on that we're going to try to avoid speaking in too many certainties today, right? But like I said, we are going to do our best to cover everything that's going on in markets, the levels that matter, and what is actually moving the markets, right? We're going to try to look deep into these correlations and try to figure out where we go next. But how are we doing, guys? Happy Wednesday. Like I said, I feel like we can say one thing and then have it be completely invalidated within 24 hours. So we'll do our best, but how are we seeing the markets right now? And I think most importantly, what do we think are the things that are actually driving price action in markets right now?
Well, I feel like it's a very unique time in the market when there is so much headline risk that it's almost like the market's just waiting for more headlines, right? Which is personally some of my least favorite, because you have to just be so in touch with like, oh wait, we just like squeezed 1%. What did Trump say? Or like, what did China say? Which is super annoying to have to do. I mean, you could obviously take the route of like just ignore it and play the levels, and honestly, it'll probably work just fine. But yeah, tremendous amount of headline risk right now. Bitcoin is sitting at a really awkward spot where I want to think that it holds here, but at the same time, it looks like Cheeto in the door, but you just never really know for sure. And it's just one of those things where, like, if they bounce equities, they'll probably bounce Bitcoin, right? And probably bounce it more, which would be fun, which would be great. But the question is, are they going to bounce equities, right? VIX is already super elevated. We were talking about that a little bit this morning, actually, before we got on the show, about how like the VIX futures look, and it looks like they just got listed on Coinbase. Looks like a very bullish catalyst for the VIX futures. But
Wait, really?
no, I'm kidding. Like, you know when a shit coin gets listed on a big exchange, like, it just puts in a meat stick, you know?
There.
Yeah. So yeah, it's it's just an awkward time in the market. I think personally, I'm just hoping for some de-escalation, because I think that the market is currently beginning to price in kind of a worst case scenario, which is, China is retaliating against Trump's escalation or increase to the tariffs. And I think the last thing that we want is some horrible game of like who's tougher between China and their potential allies in this and the US, because I think the worst case is like China reaches out to other countries and then they decide, oh, well, China's playing hardball. We would love to play hardball, but like we need someone in our corner. And then China's like, I'll be in your corner, just play hardball with us. And then you get like a band of countries playing hardball against the US. And then we have to further escalate and make things difficult on them to just get them to walk it back down. So I don't know. I'm a little uncomfortable in this market right now, just seeing how people are behaving. And I know that Trump tweeted something this morning like, buy the dip or something. And it's like, yes, okay, like I'm with you, but last time that someone in your family said that, ETH went down like 50%. So I don't know if it's different now, but uh, I don't think the market's about to V recover until we get some news, right? And if we get some positive news, we'll float higher, which will be great. But this resolves, I keep saying this, it resolves one of three ways. You have three parties involved. You have Trump, which is the USA. You have other countries that are affected by these tariffs, and you have the Fed. So either we need Trump to walk it back, other nations to bend the knee to Trump, or Powell needs to step in. None of the three have happened yet. So I don't really see a reason to just like pop off this level for anything. But as soon as one of them bends the knee, or we think they're going to, then the market's going to start moving. But just kind of having to wait until then.
Tucker, you're muted.
Oh man, that's unfortunate. I was gonna say, yeah, it's trading super fundamentally, right? Like off headlines, off of macro, unfortunately, but you're right about Bitcoin, right? It's kind of in that spot. Like this is, I hate to even say it, but weekly FVG, weekly FVG, right? We can hope. But yeah, no, it's gonna take some de-escalation. It's gonna take some resolution on the on the tariff front for this to turn around, probably in a big way, right? Like I think the S&P is getting close. I mean, we could talk about what Fed intervention would look like, but I don't know. I mean, are you guys in the camp that we get some sort of intervention before the FOMC in May?
Yes, before May. I think that people banking on a bailout from the Fed right now is it's kind of like catching a knife, right? Like you're almost betting on a headline that hasn't actually been put into hasn't been put out yet. I think it's coming. I think they have to, because eventually bond volatility and market volatility could get so extreme that they're literally forced into doing so. But unless the move continues to become exacerbated, I don't see why the Fed would step in right now. Most of the bond volatility is a result of basis trades blowing up. And in my opinion, that's mostly over levered players and hedge funds suffering, not banks or systemic risk being, systemic risk necessarily.
I mean, do you think systemic risk needs to be a variable for the Fed to step in? Is that what you're saying?
Yes, because clearly they don't want to. They don't want to. I mean, Jerome Powell does not want to be the Fed chair that causes the resurgence in inflation.
Yeah.
Which is why, you know, with the exception of the cuts that they did, I think it was in like December. You know, with the exception of that, they've been really pretty hawkish for the last few months.
No, they have been. He clearly does not want to do anything. He's clearly trying to, you know, stay the path. But yeah, no, I think at some point his hand's going to be forced. It's probably going to be due to this, right? I mean, if this keeps ripping, Tommy, like there's no way he's not going to do something. Don't you think, or no?
I mean, let's see where it trades.
Yeah.
Right. A risk tends to happen, you know, slowly then all at once. So they might think they have a handle on it or that they're comfortable with the amount of destruction that's occurring right now. And then, you know, maybe in like a week or so, things escalate. But I don't think it's enough yet for them to step in.
Yeah, it's just a question of what's it going to take, you know. Because what was that? What were you having me look? We were looking at something last night. Was it CNY USD or something?
Yeah, I mean, you have a lot of volatility in all these foreign currencies, which makes sense because it's a trade war. There should be a lot of volatility kind of just across the board. But I mean, that looks awful, doesn't it?
Yeah.
That looks like it's about to come down in a much more meaningful way. And so does USD JPY. So there are just, I think, so many moving parts. When you have so many of these instruments that are traditionally very stable and easy to maintain value, threatening some pretty high time frame market structure breaks that, you know, unsurprisingly signify that we're seeing some major changes in global economic policy. But the effects are yet to be seen. But what we do know, you know, is just looking at the chart, USD JPY looks awful. The dollar looks awful. But the yuan against the dollar also looks awful.
That thing looks completely fried, man. That thing. The good news about that chart is, okay, let's assume that we get some de-escalation in this tariff trade war narrative right now. With the Dixie looking as cooked as it is, and with my assumption, and I think it's a fair one, is that rates should be coming down soon, middle of this year, which we're almost to that point, which is crazy. It's already April 9th. What a fun year so far. Looking at the kind of global backdrop, M2's increasing. Money is going to get cheaper. Assuming we don't see a screech or we don't see global trade come to a screeching halt and further escalation, there is going to be, given what's happening with some of these Forex pairs, an incentive to, you know, shove money into risk assets. Or maybe another narrative that stems is, I don't trust the volatility in my domestic currency. I'd rather own Bitcoin. Maybe. A man can hope, right? But I feel like the global backdrop and the stage is set for Bitcoin and crypto to do very, very well. We just can't see the stock market go down like 50% from here. You know what I mean? We can't see VIX to 200.
Yeah.
Well, we can. We don't want to see that, though. You know?
No, we don't.
I know that someone on this show may or may not be entertained by that scenario. But
I mean, it's either topped already or it's about to explode up. That's my bias, to be honest.
Yeah. I just don't like how it's hanging out up here at all. They're trying, though. They're trying to crush it, but
there's not going to be a sustained crushing until there's a de-escalation, man. It doesn't even look bearish here, honestly. Like it literally looks like it's trying to like pivot before another push up, you know? It's just going to float up here until we get some good news. I've never seen a more news-driven, news-sensitive time in the market than right now, ever. It's the only thing the market's trading off of right now.
I mean, do you remember in like 22 and 23, every FOMC was all the market traded on?
Yeah. So annoying, bro.
Oh my
It's
gosh.
so annoying.
It's funny because we did a complete 180 from that. We went from like hanging on the word of every single macro movement. We are doing that again, but it's like the reaction is, I do feel like there is a Chud Jack sentiment that's just kind of in the market. And it's been persistent throughout this entire downtrend. Like, oh, I'm not going to sell because nothing ever happens. Like, oh, China will break or will make deals because nothing ever happens. Oh, I'm going to start, fading this move on volatility because bond volatility is up and nothing ever happens.
Yeah.
I think it's dangerous. Not to say that we might not, not to say that the VIX can't be topping here because it's been elevated. I mean, there's been some decent selling of volatility above 50. It could definitely get crushed here, but I do think it is just kind of dangerous to assume when the current dynamic has been Trump and Xi just continually escalating the situation, that nothing is going to happen.
Yep.
But maybe the Chud Jacks win again. For those who don't know what Chud Jack, I might have to make that my. I worry if I put a Chud Jack in my profile picture, people are going to assume that that's my view. But
Yeah.
Can we talk about some hypotheticals, guys? I'd love to know let's have a little bit of fun making some assumptions today, because that's kind of all we can do, right? Is wait for these headlines, speculate on who does what next, and just be patient. What do we think the best case is from here? What do you guys think like the most prosperous route is from right here?
What like the bull case from right here?
Give me the bull case. How do we rip off this level? And what does that rip look like for Bitcoin, for altcoins, indexes? What needs to happen? What does it look like?
Fed ends QT and cuts 25.
So your bull case isn't a de-escalation in the tariff
Well, I
narrative.
think you need that. You'd probably need a little bit of that too. Not necessarily like a de-escalate. You just need like resolution, right? I think you just
But I
need
think it's is it fair to assume, or maybe you disagree, is it fair to assume that if the Fed's not going to step in if we get a de-escalation in the tariff shit, right? Is that a fair assumption? That if this gets walked back, then Jerome Powell is off the hook. Is that fair?
You think he doesn't need to step in if they resolve it?
If China and the US come to a meeting of the minds, do you think that Powell is still going to be in a position where damage has been done already and he's going to have to step in and do something? Or is he only going to be in a position to have to do something if this shit stays escalated?
Yeah, I don't think he would. If they figure it out, if they have a resolution to the tariffs, and bond market volatility calms down and the VIX comes down and equities start basing out, then no, I don't think he's gonna have to step in. But
So your bull case is like tariffs stay in place, China and the US butting heads, but Powell steps in, money printer goes burr, and lower interest rates.
mhm.
And then we run back 2020 through 2022.
Yeah, pretty much. Yeah.
I think the best case is probably a 2020 scenario also. right? And I'm not sure like what the pain point is that causes it or that like forces the hand of Jerome Powell, but I tend to agree that you probably don't want to see it necessarily de-escalate because then the Fed won't step in. And then you're just kind of you've broken market structure on equities, arguably. You're probably not going to get QE. You'll get rate cuts, I think, inevitably, but QE will come from likely more stress on the market than we have currently. So I don't know. It's kind of like do you root for further escalation in the trade war, but just enough to make sure that you don't completely destroy the market. You're kind of between like a rock and a hard place in a way. But I think, if you see de-escalation, one, it probably means that China is making a deal, I think, rather than the United States. But yeah, I think you need some of those larger macroeconomic. I hate that I have to become like a macro analyst, but I think you're going to see some of those. You need to see things like rate cuts and, more importantly, QE at this point. But if you get QE, then it's probably just going to be 2020 all over again.
So I know there's been this. People have been speculating. Oh, Trump is doing this intentionally so that the Fed is forced to step in and cut rates. Some of the behavior that we saw with yields late last night was very, very bizarre and freakish, right? We should probably look at some of these yield charts. I haven't looked at them this morning, but they were looking like someone got blown up last night, or it was like China just dumping all of our bonds, like just being like, I want nothing to do with US debt anymore.
What, the 10-year?
Sure.
Tucker and I were talking about this last night. We were Tucker and I have been running back some nostalgia and playing COD Zombies over the last like week or so.
On the PlayStation 3, Tommy.
Yeah.
That needs to be put in there because, yeah, and I've never been a PlayStation guy. I've always been an Xbox guy. And so running it on that console with like an eBay controller used, oh man, it's not good. It's not good. It's bad.
I think we'd probably like just finished a roundup when I was scrolling through X and I saw somebody freaking out about the movement in bonds, and I was like, what's bro yapping about? So I opened my trading view and the 10-year is up like 6%. Which I can only assume is because, I'm sure there are a lot of conspiracy theories about, okay, China's dumping treasuries, Japan's dumping treasuries. Kind of sounded like somebody might have like a bond fund or somebody pretty big in the bond market was getting blown up and forcibly, or like being forced to sell treasuries. But yeah, I don't really have much beyond speculation on my end. But obviously, the higher this goes, the more problematic that's going to be because it's happening very quickly.
That's great. The 30 years looks even crazier. That's who said that? YB said that. Javier said, can you talk about why the 10-year rates go up if someone's dumping bonds? So the yields go up when they sell bonds, right? And vice versa. So it just means that wasn't it China was dumping our 10-year notes or something? Isn't that what was happening?
I think that's what people were speculating.
Okay, yeah.
I don't know if we know. Like, I've seen some really smart people push back against that idea, like China wouldn't sell our debt that impulsively.
Mm-hmm.
Yes, they would.
I think they would,
Yes, they
but I don't know, But yeah, what matters the most is that this is moving not just higher, but doing it in a very aggressive fashion.
Yeah.
Because we were kind of talking about it at the beginning of the show. The issue is not that these things are moving. It's that you have these very stable instruments that are moving aggressively in a very short period of time.
Yeah, it's not great. It's not what you want to see out of the bond, because the bond market is supposed to be, your stable passive income, get some yield, not worry about the price of the bond type of thing. But
It's like the linchpin of market liquidity.
yeah.
So I mean, it's funny because you have basically like with bond traders, with Forex traders, I mean, we've seen how much, if you've ever traded on a Forex exchange, you know just how much leverage these people have access to. So when you're trading instruments that move at most, sometimes, right, like 10% a year, you can really pile on the leverage. And that leverage, that lack of volatility kind of begets more liquidity in the market. So these super volatile moves really fuck those guys up.
Yeah, that thing's up 15% in like a week.
Jesus, man.
I know.
I wonder what it's like in on Wall Street right now in the pit.
It's probably crazy.
I'd pay a ticket to go see it. But what's holding strong through all of this, guys, right? I mean, we're getting a bit of a bounce today. I don't want to speak too soon for everything, right? Because we did this yesterday where we bounced and then ended up closing red by a few percent. Maybe that's happening again, but we are seeing some strength. I hate saying relative strength in this regime, but like Bitcoin has been looking stronger than the rest of the crypto market. I'm sure Fartcoin, which has been our risk indicator of sorts for the altcoin market, is probably also showing a little bit of relative strength. I haven't looked at it though. I'm just assuming. Jesus. The future of finance, guys. We're soon going to be replacing U.S. Treasuries with Fartcoin bonds, if you weren't aware.
Have you seen Hype, Tommy?
Yeah, Hypes.
I have.
Yeah.
Safe haven assets. I think even if the market continues to trade lower, the market's showing its hand as far as what it wants to bid off the low.
Yeah, damn, Hype hit 9.
Do you think it's at all possible that crypto actually continues to, let's just say loosely, hold up here? Because it really is not affected by these tariffs in any way, other than, yes, of course, they're perceived by most people as a risk asset and very highly correlated to what, legacy indexes are doing. Do you think it's possible that that's why we're seeing Pepe green on the day, certain altcoins trying to show signs of life? Or is it really just sort of there's really no safe haven and we're cooked if this doesn't de-escalate, right? I hate to say relative strength because it's not relative strength. It's just not. Let me frame it like this. Equities go down, crypto goes down more, right?
Mm-hmm.
If equities go down, crypto's going to go down, but it's just not going to be as bad as we think because there's no cash flow. There's no taxation on crypto. Like it really is not affected besides that positive correlation that has existed forever, right?
I've been kind of asking myself that question, to be honest. Like maybe crypto is front running. I believe the bid that we're seeing on crypto is the market probably thinking, okay, they're going to do QE. I'm going to front run the things that are going to benefit from that the most. And I also think it could be capital flight from weakening currencies around the world, right? Not just dollars, but you look at the Chinese yuan, just looks like it might be ready to collapse. Where are you going to put your money if you're a Chinese investor?
Baba, Billy. I guess they're kind of getting smoked, aren't they?
Yeah, they did.
Yeah, they smoked. Yeah. Probably takes a little longer.
Looks like it was an echo bubble for China.
Was the Hang Seng wrecked the other night? Yeah.
Oh my God.
Yeah.
Fell forward again award. Chinese equities version.
The Hang Seng.
Are there any markets out there, any indexes for any country that's holding up better than others that you guys can think of?
What does the Euro index look like? I was watching Poland. It was actually doing decently a week ago.
The foot FTFP. Oh my goodness.
Oh my gosh.
I think we were talking to Chimp about this the other day, bro. We said this.
You know what I said? I said that's the Nancy Pelosi deviation from last bull market, man.
Oh my god.
Chimp is in shambles.
Chimp is in shambles.
What does the Japanese index look like? I think I saw it was up 6% yesterday.
What is it? What's the ticker?
The Nikkei.
Oh. That was nice. I don't remember what that was from, but didn't wick out of it like the last time. Yeah, that so their index is down, but you like the yen. And the yen is strong here.
Yes. The yen is strong. I mean, maybe the Nikkei is not like that strong, right? It's going to be kind of correlated to US markets always, but I definitely like the yen more than the dollar at this point. I've been kind of saying that for a while. I feel like we're getting close to the point where we're going to see USD JPY really break down soon.
Yeah. Let's see.
Oh, we got Prometheus.
Oh, we do. There
Howdy.
he is. Howdy, brother.
Okay.
There he is. Now I can hear you.
Good morning, boys.
There we go.
Yeah, I thought it's been, man. I am loving the markets right now. I know it's carnage across the board, but this is, I mean, kind of what we live for, right? You know, the death range of last year was horrendous, but this volatility it's fun. It's fun talking markets when stuff's like this is happening.
Max, are you having fun?
No.
I mean, portfolio would for sure say otherwise. But I mean, just from the standpoint of, you know, all the action, it's a lot. It's a lot to digest. Lots going on.
I'd say it's entertaining, right? It's entertaining, but I mean,
I don't know.
Markets hate uncertainty, and this is just the most uncertain shit that I've ever had to deal with in markets.
Ever. Yeah.
But it's entertaining, right? I'm like, this is history. You know, we'll look back on this time and see the chart and be like, do you remember that? Like, that was insane.
Dude, our kids are going to talk about this. They're going to be like, the artificial colored man just blew up the markets.
They'll be like, this is crazy that like America had like a 200+ year reign, and then we just destroyed all of it, and we went down 99% in U.S. equities over 12 months. It's amazing.
99%.
Yeah. Yeah, the dev pulled the liquidity.
Look at this. Oh, man.
Oh, wow. Yeah.
Who's that guy on X that's the Doomer Bear Finance a lot or whatever his name is? He's finally going to be right with his Great Depression fractals.
Man, I'll tell you what, when I was expecting a bounce and I went on his account and I saw he was also expecting a huge bounce, I kind of shit myself.
I've never seen him bull post ever. Not once.
I think he was bull posting into a complacency shoulder.
Oof.
And I was thinking to myself, man, that's my bias. I should probably reconsider.
Dude, he puts Bollinger Bands on like
the VIX.
Yeah.
Oh my.
Which I guess maybe finally played for the first time ever, but
Tommy's like, I do that too.
You wouldn't get it.
Bollinger Bands. I don't use those, but I do
kind of some alpha with Bollinger Bands at the right
I love
time.
Bollinger Bands, like the second and third standard deviation moves. I mean, they're pretty good for the most part, especially in ranging environments. Very,
Dude,
very
that
good.
I
thing.
mean, it is really.
Wait, Tucker. Type in another indicator. Keep that up, but type in Bollinger Band width. Okay.
You want the percentile? I'm
Yeah.
assuming.
What either one? That one looks like it's capped. Find
This
one
is
that's
how you
uncapped.
study girth.
Find width.
Percentile?
No, not percentage. Just like we want like a raw. Try that one. Yeah, maybe. Okay, so it's showing how far apart they are. Is this the highest they've ever been apart?
I mean, since
Getting close.
let's go weekly. Since 22.
Okay.
Yeah, since 22. I mean, COVID was, you know, but
What is like '08? What does '08 look like in 2000s and all that? Because the move in COVID was
I mean, 08 made
oh,
COVID look like
wow.
Yeah. So
All right, so it's gonna get way worse, is what you're saying.
I mean, this says March. We had March of 24 was wider. Hmm. I mean, here's really all it is when you're outside the band, right? You know, that one not so much. You had a lower low, but outside the band, usually a decent bid on like a yearly time frame, right? So if you want to look at it super high time frame, but yeah, that's we're on the 2-week chart.
Jeez, man.
Yeah, I mean, just
What a-
looking at that, it's I don't know if I want to get into the camp of like this time is different with equities because it's like, you typically you get a minus 20% washout in the indexes. And I've seen some good tweets from I'd say more like TradFi analysts or whatever. So it's like when the VIX is above 50, like what's the 30-day, 60-day, 90-day, 180-day, 365-day, average return when you get a VIX spike above 50? And it's just like overwhelmingly green, right?
Mhm.
And of course, at that time, it never feels like that's going to be the case, but then it ends up being the case. That's a nice trend. What is that?
This is the 200 week.
Yeah, real quick throw up. It's the ticker's S5TH. It'll go right along with what you're saying, Max. Jax and I have been really watching this chart, but essentially it's the S&P 500 stocks, the percentage of the S&P 500 that are above their 200-day. And when we get into these ranges, great times to buy, especially from an investor standpoint. The PE bros, everybody's like, oh, the stock market's more valued, higher value than it's ever been before. But I mean, you really got to look at it from, like from a multitude of different perspectives, right? And the amount of wealth too, and the amount of, liquidity that's in the markets, and where the dynamic and the shift and the focus has been in the markets has been in growth. Like that's where it's at. And, it's not been in commodities. It's not, I mean, well, until recently with gold, it's not been in bonds. It's been in growth. And that's why, quote unquote, it's overvalued, but that's where the money is now. That's why we're seeing, a perceived overvaluation in broader markets, but really that's just because the majority of the liquidity's in growth stocks now. So it's like it's like are the PE bros really right on thinking that, oh, we're overvalued, quote unquote. But I mean, you look at charts like this that have historically marked significant lows and been great times for investors to scoop up, really solid names for the foreseeable future.
Yeah, this is a really great way to visualize it without question. Without question. So it's like either a couple ways that chart resolves, not the one that Tucker has up now, but
somebody asked for others ETH, but that's crazy. That thing's flying.
yeah, it is. We swept
sorry, I'll
that
go
wick
back.
low in 2021. Maybe we just take out the high and then we're good.
I'll go back to this.
So a couple ways this resolves. Either we start ripping higher and we get some stocks above the 200-day, or stocks remain absolutely in shambles and we wait for the 200-day to come and catch up. So couple ways.
Yeah, and I mean, if you think about it too, like the longest time that we've been in, I call it the quote unquote discount region where we're below 25% was '08, and it lasted, I think, 26 or 28 weeks. So 6 months, right? You see a bear market, quote unquote, for, historically, which has been like the longest time period has been, half a year, about half a year, right? So you're in a prolonged bear market for half a year, and then you see, outsized returns. If you remove '08 out of the picture, the longest time frame or the average time frame that we're down here below or in the discount region is 6 weeks. So, typically outside of recessions, we only enter this period for very, very short, brief periods of time. And I get to the whole like doomer, recession scenario. Oh, it's over. I get it to an extent, but I think it's really overdone. Where like they're like, it's the end of the United States of America, and it's the end of, the
This is the end of capitalism.
yeah, they're like, we're going into a socialist regime, you're gonna start seeing oligarchs and I think it's just really, really overdone. And I think this is, like I said, from a historical perspective and investor standpoint, great times to start slowly DCAing and scooping up some really quality names in a long-term portfolio.
Yeah.
And it's like, okay, if we're like down here, if we go into a recession from a historical perspective, okay, we're down here for 6 months. I mean, things get bloody for 6 months, yeah, but in the long run, I think being an optimist down here is going to pay dividends. And like we always say, the recessions and these periods of significant drawbacks are the periods that make the most millionaires. And the people that are willing to capitalize on these opportunities are the people that are like going to prosper the most, So I would not get like everybody's like, oh, it's so over. It's like, no, now's your opportunity to make like generational wealth potentially, and to really set yourself up for the future.
I mean, yeah, just look at this. Every time you touch this, that could not be the Pico bottom, right? But decent bid spot usually every time.
That's what I'm saying. If you were like DCAing down when COVID was happening, or you're DCAing down in 2018 when we had that tariff announcement, DCAing down in I think 2010 or 2011, DCAing down in 2008, within the next few years, the most of the time, you're probably up, 100% across the board if you were in quality names, that you were investing into. Obviously COVID was, V recovery, rapid expansion back to the upside. But the majority of the time, like if you are, taking a starter position when it truly is unwinding, not when it starts, but when it's really like quote unquote unwinding, and you're starting down there, you're setting yourself up in a great position. I think the whole narrative of it's over is so overdone. And everybody's jumping on the bandwagon now. And we know what happened in 23. We know what happened during COVID. You start to get this narrative and this conjecture. Dude, I went on Spaces yesterday, and every single space, man, was like, it's so over, and I was just like, I can't listen to this. There's no constructive conversation, it's crazy. And I was just like, dude, I'm gonna go work out. I'm gonna go slam legs. And so that's what I did. But yeah, man, it's crazy out there.
Yeah, it's really easy to be negative about what's happening right now. And that's what I'm trying to kind of walk that line a little bit of. There's for sure validity to being a little bit concerned and negative about what we're seeing out there right now. But also, if you try to ignore a lot of the news and just lean into the technicals and say, okay, we are seeing some major discounts across the board. If you've ever, during each one of these drops that Tucker has highlighted right here, if you had just basically looked at it and tried to left curve it like an ape and literally just been like, all right, look, stocks got hammered. They're down a lot in a very short period of time. I will buy. It's typically yielded some pretty good results.
It has. It has for sure. Yeah, I don't know. What is this level? 18? Like I said before, it doesn't have to be, we hung out here for a little bit here. 08 went way lower. So, but usually not a bad time. Usually not a bad time. There's some other like S&P or different high, mid, low cap, 200-day average charts. I can't remember what they are, but I'm sure they're in similar territory as this one.
Dude, how about the move on bonds though, guys? I don't know if you guys talked about it. Haven't been listening, but that has been.
Oh,
You just missed it, I think.
Oh man, God. Yeah, no, that was.
He's like, my moment to shine.
Yeah, no, it was. That's been nuts. That has been nuts.
What do you guys think about World Liberty Fi selling some of their assets that they've bought? I feel like I have to feel like that's a decent signal in itself.
Bottom signal.
If it's not, then God, that's not a good thing. But yeah, I made the joke yesterday. Donald sold the top and dumped on his son, who bought ETH at 3,000. Was it Eric?
Yeah, it was Eric.
Eric Trump is on the buttons.
Dude, I'm pretty sure the World Liberty Fi wallet was selling today. They were locking in some losses.
Do you think that's like, I don't know, like tax loss harvesting in a way? I don't even know.
It could be. If anything, I'd say, well, they bought before a drop. Now they're selling after. Maybe they just suck at trading and it's, it's going to reverse from here. I don't know, though.
Is there anything else like really? I mean, I know we said Pepe, fart coin, hype.
Dude, Pepe's up 6% today.
Max,
Good
pull
coin.
Pull up your Pepe chart.
There's some real leaders in alts right now, like Fartcoin, Kita, Hype, Pepe. All look really good. Definitely.
The fact that Pepe's at I know it's down bad from the all-time high, but still holding its bull market range low and is at 640 or whatever, with US indexes looking like they're looking. I mean, dude, any bounce from here is gonna just rip the beta, man. Just rip the beta. And it is what it is.
The strength in crypto has been astounding. I mean, it has been astounding. To have the 99.99 percentile move that we had in equities, and for crypto to be down like what we were like basically flat since the big sell-off has been crazy.
And Prometheus, we were talking about this in the beginning of the show, and I just want to be clear. I don't want to frame this as any sort of like relative strength because I feel like that's really overused, and people will always be like, we're diverging from stocks, and then like we usually don't. Once in a while we do.
Mhm.
But if you had told me, and I'm guessing if I had told you 30 to 40 days ago, all right, SPX is going sub 5K, Prometheus. Tell me about Bitcoin. Where do you think Bitcoin's trading at? Tell me where Pepe's
56,000.
trading at. ETH obviously is behaving like we would have thought, but what do you think Bitcoin's going to do, Prometheus? What do you
I would
think
have
you would
said
have said?
56,000. I mean, without a doubt.
So it's like I don't want to call it relative strength, but I want to just call it like holding up much better than I would have expected, 30 or 40 days ago. But one thing we do know about crypto is like it will lead dumps and it will also bottom before, right? It's the most reflexive, it's the most liquid, it's the only truly 24/7 market. When people are scared, they can sell Bitcoin a little quicker, a little easier, right? Which is why we will lead dumps and we'll also bottom before. So I don't know if I'm ready to just call like a definitive bottom, but I am very encouraged and surprised that we're not lower than we are, right? I feel like that has to be a good sign, honestly.
What does Bitcoin against QQQ and S&P look like?
Dude, it looks bullish.
Because I still think that what we're probably seeing is people front running QE, given that crypto is likely to be the most reflexive asset class to those measures. And if we don't get QE or if the market keeps nuking, I have to feel like crypto will probably outperform to the downside. But if that doesn't happen, then, in hindsight, it will be obvious. That kind of looks like BNB, man.
Yeah, it does actually. I mean, this to me doesn't look like a chart that's trying to sell off. I think it obviously could turn into that. We could just make it real simple and be like, start losing this, then we probably take another stab down. But this feels pretty bullish to me, right? Like I want to look at this and be like, oh, we're back in the range. It looks pretty good. I was watching this gap over here. I put out a tweet about this where I wanted to see this gap filled. So obviously this gap is going to fill one of two ways. This is the Bitcoin QQQ pair. Either, equities take a dive and, Bitcoin dives more, or Bitcoin kind of grinds higher, chopping, not really giving out, and QQQ, pumps or something like that. We get a little move off the low and backfill this, but we filled this gap from the pump. So I don't know. This doesn't look bearish to me, right? Not right here. Obviously, again, could turn into it, but let's throw on the 180 day also. Like looking not bad in my view. Chilling above your 6-month VWAP, holding your range low here. I don't know. Like if equities continue to dive, then I think you probably see this thing lose that level, right? You'd probably see if equities dive or something, then you'd probably see this and then probably go down to the yearly and take out the low, and Bitcoin would just not be having a good time. But as of right now, it's like I think it's premature to get bearish on it for now.
I will say, like with Bitcoin, especially at these levels, and I've been talking about it in the Discord quite a bit. You want to see, like, at these levels, you want to see strong demand step in, but the lack of a sell-off also shows how strong the institutional side has been. And what I mean by that is if the majority of the liquidity in Bitcoin at this point was in retail hands, like it was last cycle, you probably would have seen the capitulation down to 56K, like I just said. But the institutional frame of mind is much more different than the retail frame of mind. And because of that, I think that's really actually allowing Bitcoin to hold up decently well in the face of such a crazy move. Now, do I think that we're, bottomed here? Like I said, I want to see strong demand here. Like we're in a huge level. We're retesting previous all-time highs. We're retesting a trend line of the August 5th lows and September 5th lows. We're coming into, arguably a huge demand level. And if you don't want to see further sell-off, then you want to see a strong reaction, buyer step in, and you don't want to see what we saw previously back from, beginning of March to the end of March, where we saw a super illiquid, chop grind higher that does not signify a bottom, right? Bottoms are usually formed from buyers willing to come in and step in and buy the lows because they think price is greatly discounted at those levels and they're willing to bid it. That's not what we saw at the beginning, like I said, at the beginning of March to the end of March. And so where we're at now, I want to see a little bit different behavior. And if we do see that, I think you could 100% say that the lows are probably in, barring something doesn't blow up in equity and TradFi land. But I remain cautiously optimistic right now. But at the same time, I do think that I think volatility in the broader markets is extremely expensive right now. I was talking about in the Discord kind of with Tommy. And you could see further sell-off, but that does not mean necessarily that you see another huge expansion of volatility in the same manner that we had. So really eyeing that, and Ethereum needs some help. Like it just needs some help, and it needs to incentivize people again. That's the biggest thing that I want to see out of Ethereum, and especially from the foundation, from Vitalik, and from a market adoption perspective. It's like Ethereum incentivize people and people will come back. That's what you got to do.
Yeah. And guys, we will be back in 55 seconds.
Tired of outdated trading tools, confused charts, dozens of tabs, endless stress? You're not alone. Introducing BB Terminal, your all-in-one command center for crypto trading. Track your portfolio, monitor the markets, stay ahead, all in one place. From chaos to clarity, from struggle to success. BB Terminal.
Man, I love that commercial. Z put together something
Wait,
real
I've
special.
never seen that, bro. That was actually pretty cool. I've never seen that.
Are you gonna buy BB Terminal now, Tucker? Is it that cool?
I mean, that was honestly, I've literally never seen that. That was cool.
I'll send you a discount code, okay?
Max, thank you.
Looking at Bitcoin here, we were talking about this yesterday. We're sitting in a weird spot where, you've got clearly some supply overhead, right? But all the people out there that are calling for these lows to get hit or something, I've seen a lot of 50K calls, something like that. We spent so much time building this value that you just look at this cluster, man. Look at this cluster. You just can't get down into here and be accepted back into this, this value. You just cannot do it. You cannot do it. Like, you have to be holding like right around here. That's it. You spent 8 months building this cluster. There's not a scenario in which you can just like nuke down here. If you do, you're just so fried, man. It's so clear to me. Like, I hope that we're just filling in this void right here. That's my hope. But you can't go down.
Highest volume node probably on the entire chart. How does it compare to the volume at the 2022 lows? I'm curious. Damn, man, that's kind of insane to see.
Big accumulation. But see, this is a prime example of like, okay, let's just look at it like this. So we had clearly some major accumulation down here, right? Major volume, major accumulation. Like, if this had sold off, and came back down into here, it's like you can't do that. When you spend this amount of time and you put in this kind of volume, you just can't like get reaccepted back into that accumulation, man. Here, let's look at like last cycle. Obviously lost both our 6th and yearly VWAP right here. Does this not allow me to? What the heck? You serious? Try the 12-hour. There you go. It's like, this was part of your problem here, like all of this volume, a lot of that was, this that sent us higher. And it's like, you move back down into it and you're just stuck. You're just stuck in quicksand, We want to avoid the quicksand.
Yeah, I think in the same way with equities, right? You'd rather have a fast move than a longer drawn out one. I still don't think the stress that we've seen on the market is enough for them to really make like major economic and monetary policy changes. But, that doesn't mean that we can't bounce here in the near term without them, right? It's not going to take a huge bit of clarity for that to be the case. But I do think the likelihood that we are in kind of like a longer term downtrend increases if the downtrend is going to be more drawn out, right? Versus just this quick move, COVID style, leads to fiscal printing that would directly benefit Bitcoin and really, you would think the majority of crypto.
For sure. So like, look at this, just showing you guys. So we spent 3-4 months accumulating right in here. Huge measurable volume accumulation. Whether it was scam accumulation or not, doesn't matter. You can't come back into it. When you do, you're in quicksand. You're stuck.
God, I remember that range. It was the absolute worst.
Those levels were so clean, though. We were just ping-ponging in between those two big volume areas.
They were clean, but like the way it traded was so AIDS. We had like the Russia-Ukraine invasion. We had a bunch of other like random short squeezes. If you weren't playing the extremities, you got annihilated.
Yeah. So when I look at this right here, it's pretty clear to me that we cannot come back into this region under any circumstances. Like, can lower this a little bit and be like, okay, here. Like you cannot come back in here. This must be concrete.
I think at the lowest too that you'd want to, potentially go is bounce off of that major volume area at like 68K. It's like the lowest you could go, and immediate. You just want to see immediate buyback. Otherwise, yeah, you do get acceptance down there.
Yeah. But it's going to be interesting to watch this level too. Like this is going to be a stubborn level. If we do bounce out of here, no doubt we're going to be stuck here for a little bit. Then maybe we can move up, but do not go back there. Because then you do this. We'll be good. We'll
if
hold.
we go down there and get QE, I would probably be a buyer.
Yeah, QE's kind of like the ultimate out, right? Where it's like, it doesn't matter what the chart looks like anymore. Your levels don't matter. It's just like, oh, they're just going to print money and lower interest rates. Okay. Number go up.
It's going to have to be the Fed. Need J-Pow to step up.
Yeah, the rhetoric between Trump and Jay Powell is very interesting to watch. And to see such misalignment between the president and the Fed chair is you will not often see, and especially to the extent that we're seeing it right now. And I do think that there is a discrepancy. There's obviously a huge discrepancy in what Trump wants and Powell wants, and there's a huge discrepancy in what the market's predicting when it comes to bonds and rate cuts and what Powell has reiterated from his rhetoric. I think the market's pretty mispositioned or offsides across the board in probably a majority of the sectors. I think that the majority of people are probably largely at this point. I think the short trade is probably concluding in the short term. I am probably expecting a bounce. I think that the long bonds trade was overdone. I talked about on my channel on Monday how I was wanting to short bonds coming into the middle of this week, and it just, front ran me, I guess, and the train left without me. Unfortunate. I wasn't expecting the market to kind of call the bluff that soon. And then with like inflation, trueflation is like entering what, deflationary? It's entering like the deflationary point at this point. And how is that going to work with like Powell? Is Powell going to continue to keep rates elevated as we enter a deflationary state to counteract the potential possibility of another ramp of it, or another ramp up of inflation due to the tariffs? So I remain very cautious in the markets right now, and I want to reiterate that to everybody. Like, now is not the time to be like, leverage bar, slide it to the right, max short, max long. You got to be very, very precise in the market right now, even more so than what we've seen, over the past 12 months. I think you have to be extremely precise with your risk management.
I do agree with that. If you don't manage your risk, the market will manage it for you with this much volatility. But I also don't know if I think that the trade is necessarily overcrowded, because if the market were properly hedged, the VIX wouldn't be trading multiple days above 50.
But I mean, you also got to think of it from the standpoint perspective of like how the market is digesting the current headline, risk right now. Everybody is, with everybody piling into the trade right now. Yes, them not being hedged already. Had everybody been hedged already, we would not see it, heightened in the manner it is now, or last at these levels as long as it has. But also, I think that you are clearly seeing a lot of people that are late to the trade. And I think, just from what I'm hearing and what I'm seeing, everybody is bared up to the bones. And dealers, like I discussed in the Discord earlier, are clearly offloading or taking some long vol off the table above 50. That's very apparent. I think vol is becoming more expensive. Now, is it to the point where it's completely, insanely overpriced? Not necessarily, but I think it is rather expensive right now. And there's a huge or a rather high premium on volatility at this point. I don't think volatility is necessarily cheap anymore. I think there is
I
probably
definitely agree with that. If you looked at the pricing of like any options contracts and their implied vols, they're just like not nearly the same profitability on pretty like huge moves for some of these contracts.
I mean, yeah, as you know, I love options, and I mean, I can sell, I can put on an iron condor, for instance, right now that is like 2 or 3 multiples of a move or of a range wider with the same delta exposure that I would have been able to put on, before this happened, which is wild. Um, yeah, it's just nuts what's going on in the markets right now.
I feel like markets, the predictive ability of, just kind of the metrics that we typically use are kind of, they will be effective on a certain time frame, but if you're using them for like granular entries, calling tops and bottoms, they're not going to have the same effectiveness, because the moves that we've had in markets this week and really the last few weeks have been so abnormal in so many different areas that I just don't really know. Historical precedence is only going to be valid to a certain degree, right? And I think that has to be taken into account if you're trading it.
I 100% agree, man. I was thinking about this like the past 2 days, right? And especially in relation with like fractals and everything, like context is so key. And applying it to, historical what we've seen historically is very, very tricky right now. And you have to build so much context into relating it to what's happened in the past. And if you are deriving similarities. And so, yeah, I mean, you have to be very, very aware that this time is, unseen. Like, we've never seen this in the markets before, and we will likely never see it again in the markets.
Yeah. Did you read the Ray Dalio piece the other day?
No, I did not.
I mean, it's like, I think it's a very good piece to read if you're just kind of confused about, I'm not saying that this is you, Prometheus, but I know like a lot of people in general, they're just like, oh, why is the market doing what it's doing? These stupid tariffs causing the market to nuke. It's not about the tariffs. The tariffs are relatively, they might be a part of like a symptom of what's occurring, but they're not the driver. We're watching a fundamental restructuring of the global economic regime right now, which only occurs about once every 100 years. You can consider us lucky or unlucky, depending on your perspective, but that's more or less kind of what we're seeing right now. There is not like any precedent that most people who are trading markets have ever, experienced that's like this.
I agree. And it's, like you had said, it is a restructuring. And what we need is we need to give Trump 4 more terms so that he can see it out. But no, I'm just kidding. Yeah, it's gonna be a wild time in the markets. And I mean, ultimately, what you would like to see is for and I mean, China's not going to want to do this because they have very much, people think that the cards are potentially in the United States hands. But they're not really. They're much more in China's. And there's a give and a tug, a take and receive on both sides, obviously. But China's in a favorable position, obviously. They have the better end of the stick when it comes to the global economic trade. And what you would like to see is if this does work out and we do get into a global economic environment and trade to where tariffs are largely taken off the board, and most importantly, between the United States and China, you're going to see the world economy go bananas. You want to talk about a super cycle. That's a super cycle. But from a positioning, political and geopolitical positioning standpoint, China doesn't want to give that up. And that's what we're trying to make them do, is we're trying to make them bend. We're trying to bend them to our will to then open things up, and then the consumer can truly benefit. So that's kind of an interesting dynamic in the market right now.
China versus the United States. We're going to have to see how everything continues to escalate here over the next few days, the next few weeks. There are a lot of moving parts, guys. But rest assured, we will be here to cover all of it with you. I think that's a good spot to begin wrapping up the stream. Going to very briefly go through some of the offerings that we provide at BB. Prometheus, could you pull up the terminal, just because it's hard for me to highlight it while I'm speaking?
Yes. Give me 1 second here, brother.
But yeah, if you guys enjoyed the show today, you want maybe a bit more access to the team, hear our thoughts on the market in real time, we've got a few ways that you can do that, starting with the BB Discord. Like I said, you want intimate thoughts on the market, at times even our positioning, we provide them. So make sure to come check that out. 4 to 5 hours of calls every single day as well in a kick-ass community. We were nice enough to package it together with what Prometheus has pulled up on the screen, the BB terminal. So if you're looking for your go-to trading tool, we've obviously run a few ads for it throughout this stream and throughout the streams this week. I promise you guys will not be disappointed. It kicks ass, and we are continuing to make it better and better. So that there is no second best, not just daily YouTube live stream, but also, trading terminal and tool for you to use, whether or not you are an active trader, long-term investor, and soon DGen on-chain. It will be your go-to tool for this cycle. But guys, we also have the BB Academy. So if you're looking to hone your educational base or even reach trading level mastery and get a little bit more of a, an intimate learning experience with the team, we've got the BB Academy for you as well. So check that out. And last but certainly not least, we have BB Wealth Management. So if you're interested in having the team manage capital for you, we have an SEC registered hedge fund that looks to manage digital assets in a way that captures their asymmetric history for upside returns while also balancing the downside risk posed in any financial market. So if anything that I just said over the last 90 seconds, if anything that I just said over the last 90 seconds has resonated with you, check out the description below. We've got everything linked in there. But yeah, make sure to check out Market Check for the rest of the week, guys. A reminder that we are live 11 to 11:15 a.m. Eastern Standard Time, Monday through Friday, whenever the New York Stock Exchange is open. But make sure to finish your day as well with King Wabi's Market Talk, hosted through our Because Bitcoin X account. I'm sure after close on pretty much any given day these days, there's just going to be so much more to talk about than what we were able to cover in the morning. So tune in for his show as well. But that's it from us, guys. We hope that you enjoyed the stream. Make sure to stay safe. These are wild times, wild conditions, but rest assured, like I said, we'll be here to cover it with you all. Thanks again, guys.